So where are you guys at now? Like you've taken on money. You mentioned Series A earlier. Have you gone past Series A? And then also what I know Chris wants to talk about exit strategy a little bit because that's kind of a hot topic right now in the event space. But what does it kind of look like going forward for you guys, and how do you see this growing?
So we did raise a Series A back in 2021, and that was really exciting. Unfortunately, now the company is in a position where we don't have to raise again if we don't want to, right? So you can kind of control your own destiny. We have a long while to go, which is really neat. Um, and beyond that, now I think, back then at least people were like, oh, you're in the headlines, you're doing this, you're doing that, you're raising the money. But now it's just like doing the unsexy work. Like our day to day isn't like this glamorous sort of thing, right? Like we're fortunate enough that we're on a podcast with Mr. Chris himself, but generally speaking, we're just opening the CRM, calling people, writing emails, doing that stuff. And so, yeah, nothing too sexy, just doing the day to day work.
Cool.
So I mean, this is just such a classic American success story, the way you guys, it sounds like you caught a couple breaks, but you're not strangers to the hard work. Like you said, you hit 1 in 1,000, right? Well, that's a lot of swings.
Mhm.
So, so maybe you didn't have an intentional choice to go, we choose, venture capital as our doorway. But as traditional bank loans, government backed loans, private equity. Was there any thought of different types of financial resources you could tap into? Or did you just go, we're going where the energy is? And the energy
Well,
is a Draper contract, right? So,
I guess, but yeah, before the Draper sort of situation, I mean, it was like an option because like we had launched Yak and it got some traction at that point, and we were just like Hunter mentioned, we were bootstrapping for a little bit,
yeah,
and looking at like other options was certainly an idea. Do we go get a loan? Do we go do this? Do we go do that? But I think the thing too that made the venture side so attractive to us too was not only was it more money than any of us could even comprehend at that point in our lives, right? I mean, neither of us had ever seen that much money. But two, the connections and kind of the gas that comes with, a venture deal into your business is really incredible. I mean, the doors that now some of our investors have opened for us is crazy. One example that I tell all the time is we had a couple of people from Gary Vee's company, VaynerMedia, sign up for our app, and we're like, okay, how do we get
right.
this thing over the finish line? And then one day, we put out an ask for our investors, and within 48 hours, we were on the phone with Gary Vee, and he was like, "Yeah, let's ride, let's do this thing." So that is kind of like the unspoken things that venture also gets you. Not only it's the money, but it's the connections, the resources, and the amplification that it can provide to you and your company.
Yeah.
Great point. If I heard you right a minute ago, you guys are in a good place. You said, should we choose to ask to go after more, we can, but you don't feel the pressure to do that. Do you see the business at a point where you can see revenue and earnings being sustained off of the investments that you've already acquired, and we can just, I mean, maybe there's if we want to 10x this thing, maybe there's another kick at the can you might like, but you can see the vision that you have, you can see executing with with the seed money that you've already acquired. I don't, seed money is probably not the right term, but you get my point. You guys are, you're out of the garage, you know, you're moving it, you're in the hammer lane, and you're at 5,000 RPM in fifth gear, and you're liking the view, the wind in your hair, right? So
Yeah.
what dragons are you trying to slay right now? If I could ask that.
Yeah. The ironic thing about your question, by the way, that, hey, look, we're probably not going to raise. But what's so funny about that is that the time to raise and the raising is when you don't need to.
Right.
It's exactly what happened to us. Didn't exactly need to when we raised our Series A. And I think we raised 6 or 7 million, but we didn't need to. So I would encourage anybody is in a position of strength right now who's looking to either raise money, looking for bank loan. This isn't financial advice, but I just know how these investors think, or at least I think I do. And they don't want to be funding something that's dying. They want to get on the rocket. For
Right.
us, it's like the time to raise would actually be when we don't need to. line where we don't believe we're going to need to raise, which ironically may end up actually helping us raise even more. This is going to be really helpful to, I think, a lot of entrepreneurs, is that we were a meeting tool. 7 months ago, it was just an online meeting tool. And so we said to ourselves, what do we do better than anybody else on the planet? Answering that question, then you start to get into some really interesting territory. If you hear some noise in the background, I just had my sister-in-law just had a baby and then they come in. So
that's playing even more into the entrepreneurial mystique. There's a baby in the background.
Yeah.
You like that? So what do you do better than anybody else in the world? And so you take that and we said, okay, it's meetings. Well, we were a $2 product up until 2 years ago, a year and a half ago. It was only $1.99 one-time cost. Wow. I just don't talk to many technology people. I know that's not the audience here, but I want you to realize one of the investors said, okay, how do you make that recurring revenue?
Right.
Because that gets very attractive because you turn a recurring revenue by a multiple for an outcome. Okay. Then you say, okay, well, now we turned it into a $10 product. We added a few features. How do you turn that $10 product into a $1,000 product or a $100 product? That's where we are today, which is why we charge about $250 per person. Then it gets to the next level, which is where we are next, to answer your question. We now know that events across their entire event, 50,000, 100,000 meetings in a very short time frame, and these people don't get to talk for another few years. So you got to make them count and you got to remember it, are in the hundreds of thousands of dollars. So we took this $2 product and you just go into a different industry and just focus on what you're really put on just a few extra more features that you really become a vertical solution rather than we do everything vertical. And now we can say, hey, look, we're doing these really amazing things for this one. It's changed everything for us. I don't know if that's going to work for everybody, but that's the advice that our investors have been giving us. And you see the fact we're even having this conversation means that it's working to some degree.
Look, I want to be conscious of the time because I know you got a hard break coming up, guys. 2 final questions that I'm thinking of. One is, so, we have a lot of owners in our space. Typically, when they go for the kind of money that you guys did to scale up, it's usually to buy a piece of real estate or a big box facility that they need. And I've got a lot of owner friends that have waxed poetic about hating that they've got quarterly financials. They got to report to the bankers, and there's other opinions now, sort of overseeing. Is that a thing for you guys that hey, this is now, this is a part of the business that we've had to get good at, or we don't love it. And just follow up to that second question is, have you been able to move the holy grail, right, for entrepreneurs? I need to go from working in my business to working on my business full time. Have you been able to make that leap, or are you still grinding at night on slapping code and trying to just make the trains run on time? So either one of you or both of you, any thoughts on those?
Yeah, as far as kind of the metrics and reporting, I mean, it's something we've definitely had to learn, and we do it all the time. So every week, we have to report our metrics. Every month, we send an investor update. Every quarter, we have to send like all the financials, so the the P&Ls, cash flow, all of that stuff, right? So that is an adjustment. And then on the note of kind of working on versus in the business, I'd say a little bit of both. I mean, I feel like every day Hunter and I are in the business, like grinding on sales or marketing or putting together proposals or decks or whatever. And we're certainly not afraid to get our hands dirty. So, a little bit of both for both of us day to day.